So you just good morning students. You just see here I have given you the rules of accounting. Okay. So rules of accounting are of two types. One is traditional or golden rules of accounting. Another one is American approach. These traditional or golden rules of accounting are not used today, okay, in for recording purposes. Okay. So although it is not used for recording purposes, yet the knowledge of golden rules of accounting should be kept with us. Okay, so here you see there are three accounts in golden rules of accounting. One is personal account, which is related to persons like Ram, Sham, Jodhu, Modhu, etc. Real accounts, which include assets, okay, tangible or intangible assets. Then nominal accounts are included in nominal accounts include all expenses and losses, okay, or incomes and gains. Okay, so what are the rules? In case of personal account, you have to debit the receiver, credit the giver. Okay, so if Ram is the receiver, okay, that should be debited. If he is the giver, that should his account should be credited. Then real account means it includes all tangible and intangible assets like furniture. It is a tangible asset which can be touched. Intangible assets are goodwill which cannot be touched. So debit, okay, asset account, what comes in, and credit, what goes out. Okay, the asset account should be credited if it goes out from the business. Nominal accounts are debit all expenses and losses, credit all incomes and gains. If there is a expense or losses in the business, that should be debited. If there is income or gains, that should be credited. Got it? You just see here traditional or golden rules of accounting. Now come to the American approach. Okay, here you see the American approach, okay, the rule which is used today, okay, for recording purposes. So there are 5 heads of income. One is asset, liability, expenses, revenue or income, and drawings. So asset, if it increase, it should be debited. If it decrease, it should be credited. Liability, if it increases, it should be credited. If it decrease, it should be debited. Expenses, if it increase, it should be debited. If it decrease, it should be credited. Revenue or income, if it increase, it should be credited, and if it decrease, it should be debited. Drawings, if it increase, it should be debited. If it decrease, it should be credited. Okay, so as per this formula, if an asset comes into the business, okay, the asset position increases in the business and that should be debited. If it goes out from the business, it should be credited. Similarly, if there is loan taken by any borrowings made by the business, that is a kind of liability for the business. If it increases, it should be credited. If it decreases, it should be debited. Expenses, you know, salaries paid, wages paid, rent paid, these all are expenses. If it increases, it should be debited. If it decreases, it should be credited. Revenue or income, rent received, by any dividend received, by interest received, that is a revenue or income for the business. So if it increase, it should be credited. If it decrease, it should be debited. Drawings, any capital, any amount of capital, if taken out from the business, that is an increase of drawings. So if it increases, it should be debited. If it decreases, it should be credited. So I hope you have understood the American approach, okay, which is used in today's world for recording purposes. So I hope you like my video. If you like my video, please subscribe my channel because I am very new to this channel. Okay, so please subscribe, like and share and comment करना मत भूलिए. Thank you.